What's up, everybody? It's Jared Fausnaught. I'm here with Conor Reilly from Washington Capital Partners. We're back with Minicast episode number 9. We've been on a little bit of a hiatus for the last couple of weeks, just with the birth of my son. So extremely exciting time.
Congratulations.
Thank you so much. A little sleep deprived, but we'll make it through. This is going to be a fun topic. So we're talking about how to raise the money today. So this is something that's on everybody's mind these days, in addition to finding deals. Those are two of the key components to being a successful investor. So we're going to be digging into that and really trying to get you some good nuggets today. So
Absolutely.
So yeah, really just kicking it off. The first thing that came to mind for me was, before you even think about like where do you go to raise money, and you know who you should, like how you should be doing that, all that kind of stuff. The big thing is be prepared, right? Like everything that you do, you should have a team. You should be prepared. Part of that means having a presentation together. This
hmm
is this is a business at the end of the day. You have to treat it like a business. And if you were treating it like a business, you'd have a P&L, you'd have a balance statement, balance sheet, like you would have all these financial documents. So the same is the case with project finance, where you have a real estate deal, right? The real estate property is the business itself in a way,
Yep.
single purpose entity. So you need to have a pro forma. You need to have all of those numbers crunched in advance of you going to raise the money. Now, the hard part about this is your timeline is really all compacted, right? Because we all know how hard it is to find a deal these days, and your timeline may be hours, not even days. We're talking about, especially if you're dealing with off-market deals with wholesalers and what have you, that you're dealing with
24-hour deadlines.
24-hour deadlines, potentially not even be able to see the property. So you have to have all of your templates in advance to be able to, like your pro forma, a nice presentation, maybe put together a PDF for your investors, and have that all ready to go to plug in all the data. Like as soon as you get a deal, you analyze it, you say, with your agent or yourself, if you have access to comps and Zillow or the MLS, run all that information, decide, is this a good deal on paper, right? If you can get access to it, great. You probably got a little bit longer of a timeline, a horizon. But if you can't, there's no access beforehand, it's all on paper, and you have to be willing to take that risk, which is okay. I mean, we're in the business of taking risk for
Absolutely.
hopefully good return. And so you package all that up. You've got your templates, at least a pro forma and a presentation of some kind to make it look professional. And then, as soon as look, I'm going to do this deal, you can reach out to a lender like ourselves. We'll get you a proof of fund for the funds for the financing side of things. And then you just need to look at the difference. What is the down payment? So you're going to want to work with the lender to figure out what is that number.
hmm
So
And I think one of the bigger things is, even before preparing those templates, is just having the conversation with those individuals that you would be sending those templates to. Get a feel for how much they'd be willing to invest with you, what rate of return that they're looking at, what type of projects are they comfortable going into. Because then if you have your Rolodex of, call it, let's 6 or 7 people, you know who to turn to for different projects. You're already preemptively saying, I think I can raise X amount of dollars for a single family home. Now you know what size down payment you can get into with a lender.
yeah, absolutely. Such a great point. I did start a little bit further in the timeline. I mean, you have to prep everybody. I mean, raising money is a job in and of itself. If you
Mm-hmm.
have partners, it may be smart to designate different roles for your business. Somebody's raising money, somebody is looking and analyzing the deals, working with the construction component. Like that's usually a big division of responsibility that we see among partners. But you have to get your network primed, right? And it's a little bit of fake it till you make it if it's your first deal. You have to come with the presence that you are doing deals, that you are a serious investor looking to get them a solid return. And we're not talking about, it could be equity and you could be giving up 50%, or it could be debt, right? We're really not going to have time. Unfortunately, I'd love to get into that whole conversation, debt versus equity and what's better. We'll cover that on another minicast, but let's just assume it's money, right? And we're not going to put a dollar amount on it. So go to your friends and family first. I mean, the people that are
Always.
around you are going to be oftentimes the easiest sell because they already believe in you, in your normal day-to-day life.
Mm-hmm.
And if you can show that you're truly prepared and that you've mitigated your risks, that's going to be a much easier sell than just some random people that you present this opportunity with.
Absolutely. I was thinking about we should touch on that. That first sphere that you always go to is friends and family money, right? That's what you're going to be raising. Next, I would say honestly, search the real estate investment groups on Facebook, Meetup. There's always people willing to invest in deals. And then from there, you're just networking. So the third sphere is networking. Hey, who do you know that's a private lender? Be willing to fund down payments? Who's a gap lender? So that would be your third sphere of who you go out to search for down payment money from.
Yeah, and to not get too into the weeds there, but there are going to be people that are out there already, issuing debt,
Mm-hmm.
money in the form of debt as gap funders or second lenders, whatever you want to call them. They are few and far between because it is riskier, and even though it comes with a higher interest rate, there's just less of that. So it's just more risk being behind a first position lender. So we're on the equity side if it's friends and family or what have you. Another tidbit, a piece of advice that I got back in the day raising money was, if you have access to the MLS, great. You can pull a list of all the cash buyers and do some skip tracing, and then you have a list literally of potential investors. If somebody bought a house cash for $1 million, you think they got a little bit of money to maybe invest with you and get a return? I think so.
Absolutely. Yeah.
So that's a key. And if you don't have access to the MLS, your agent may be able to help you there. But it's a long endeavor to raise money, and it's going to take you years to build that network up, just like you're building your business.
How about rate of return and what do you see people generally structure, the not always the documents, but how that investor is being paid back?
So equity and debt are a little different. Equity, you're always being paid at the end, right? You're,
Mm-hmm.
you're riding in the deal, so to speak. You are a partner, a silent partner in essence. And you as the investor, right? You as the deal finder and the architect of the deal, the conductor, so to speak. You're obviously trying to pay the least, of equity. That person's trying to get the most they can. So it's a negotiation, right? If you can be in the 5, 10, 15, 20 range, you've done a great job. If honestly, like if you're giving somebody 50%, it's because you don't know what you're doing and somebody's taking advantage of you. Like
That's a lot.
the amount of risk that you're putting in is not worth 50% of it. But
Yeah.
if it's your first deal, and you find the right deal, don't be too picky, because you just got to get started. Once you get the first deal, you can put that in your portfolio to show your investors, like, look, I was successful. I already did it once, and it all becomes easier. It's just like, it's all about the law of one, which is like the first thing that you're ever doing is the hardest. And once you get over that barrier, it always gets easier. So
Yeah.
whatever it is you're doing in your life.
I always recommend that clients do one on their own first, because then they can prove to others, hey, I did this by myself. I can do it with yours now. So you have a proven track record. It's your own risk. You make more money that way because you don't have to pay as many other people back.
Yeah.
And it's very just easy to say, hey, I put in X amount. Now I want to do this 2 times in a row, but I can only do that by having more capital. Are you willing to invest in what I just did? Here's what's proven. It took me X, Y, Z. You have your template essentially of what you're going to be doing moving forward.
Yeah, exactly. I mean, if you have the cash yourself, do your first one in cash, and then then show everybody what you've done.
Yep.
You'll have your portfolio that you can present pictures, take professional pictures. I've seen investors that will, while they're building one, right? If they're raising money, they'll actually host a party. They'll host a get together at the finished product, or even if it's not fully finished, they'll bring people, they'll bring investors and friends through, explain the project, explain the process. The more that you can explain and let somebody touch and feel it, the risk, the fear goes away from investors, and they're like, okay, this is manageable, right? It's a process. It's, demo, framing, mechanical, this is not rocket science. So it's, people get more comfortable with it. So I've seen really big success with that, and I highly recommend that. What else? Other thoughts? Disclosure, right? Like, probably should have said this at the beginning. Any advice that we give, you got to take it with a grain of salt. You have to figure out what works for you. We're doing this a lot. We're in the industry, but we're not legal experts. We're not CPAs. We're not any of that, right? So I want to just do a big disclosure there. And in the same vein, disclose everything to your investors, right? To the people that you're raising money from. The more open you are, the more honest you are, that will only help you in your business.
Absolutely.
It'll help your reputation. People will come to know you as a trustworthy person who discloses everything. Disclose to your lender, right? We have, as a lender, we have certain requirements in the back end of the business that we have to make sure things are up to a certain standard when we're looking to lend money out. And we have certain disclosures that we need to understand. So if you're raising money, let us know, right? It's not the end of the world. We get that a lot of investors are cash strapped, right? Especially if you're doing a bunch of deals, right? If you're doing a bunch of deals, you're going to be cash strapped, and you're probably raising money from somebody. It's not going to be all your money. So just tell us. It's not a big deal at all. What else do we got?
I think those are very, very high level major points of it. I'm sure some people may ask, and we can do this in another podcast, how do you structure the conversations? How do you make that ask?
Correct.
Because taking that first step, hey, will you lend me $50,000, is pretty difficult. We could probably go into a whole other time of, what do you say? What are you presenting? You're presenting rate of return, time frame to close, who is my contractor, all of those things. So maybe we could touch on that a separate time.
Yeah, absolutely. And another thing also, just to throw this in, know when to walk away too, right? Don't be so desperate that you tie yourself to one person, right? There are some investors that you can just tell off the bat that are going to be a nightmare to deal with, right?
Trouble, yeah.
They're like, think of these people as partners at the same time. Even if they're giving you debt, right, and they're more of a lender, think of them as partners. Is the person that you're going to want oversight in your project? Are they going to, like, in your initial question, are they going to be asking questions about like finishes and your contractor and things like that? It's not bad to ask those questions and to have prepared responses, but like, you really need to dig in then in your investor meeting on how hands-on they want to be. And I don't think it's a bad thing. I've raised money. I don't think it's a bad thing to ask them, what is the expectation from you? What do you want to be involved here in the project? Like, are you bored? Are you looking to do your own project and you want to try to micromanage me? Do you just want to put your money at work and you're like, real estate's not my thing. I'm in the stock market and I'm just going to let you handle this and make sure you give me a good return and I'll keep coming back to you. So ask those questions and just be really open with people. And goes the same thing as like the disclosure.
Yep.
Just be open and honest with people, and it usually will flush out. We as lenders see so many bad partnerships blow up, and that's like one of the number one killers of deals.
Absolutely, yeah.
Lose money, and it's like, I don't know. Like, even within the last day, I've had somebody that is, there's a an issue on a deal with two partners that are suing each other. And it's just like, can you imagine how much of a headache that is and how much it takes away from your other projects or anything else you're doing in life?
Oh
So
yeah, we see it all the time.
spend that extra hour, spend that extra minute, really getting to the bottom of it before you dive in with somebody.
Well, we gotta cut this one short, but please, everyone, subscribe. And if you could comment of any other topics that you would like us to touch on, be more than happy to try to weave that into our current schedule.
Yeah, hit the like and subscribe button below. This should be on Facebook. I don't know if we're chopping it up into podcasts as well, just audio, but please hit the like and subscribe button. Follow us. Tell your friends about it. We're really trying to grow the content on this page and hopefully just make an impact and help people. So whatever you can do, definitely comment in the comments below. So we really appreciate you tuning in, and we'll see you on Minicast number 10. Thanks.
Hey guys.